Hello everyone and welcome back to another episode. Today we are talking about AppHarvest, ticker symbol APPH. And if you haven't heard about this company, it's in my opinion one of the most interesting small cap companies out there on the market. So let's go ahead and take a look. AppHarvest is a company, by the way, this is Webull if you want to look at these charts and follow along. AppHarvest is a company that initially went public via SPAC at $10 a share. Now when they originally went public, they went public at $10 a share and then skyrocketed in price due to investor excitement, at one point reaching $42 a share. Now since then, going back to February 2nd of this year, after that peak, they have since downtrended and downtrended and downtrended, and just today they hit a new all-time low of $5.41. So if you look at this stock chart and just look, and this is why it's so important, guys, is why you look at the fundamentals of a business. Because if you're just looking at, oh, the stock went down, it's time to buy it. And while it might be easy to look at this chart and say, hey, this company is down 85% plus from its all-time highs, is now the time to buy? Well, I think we'll go over that in this video and I'll let you make that educated decision. But I hope you guys enjoyed this video. If you haven't checked it out already, check out all the links down below in the description to Robinhood, Webull, M1 Finance, Yada savings accounts, credit card referrals, and all that other stuff. But thank you guys for tuning in. And let's go ahead and get started with the fundamentals of APPH stock, or AppHarvest stock. Well, jumping over to their investor relations, if you don't know what this company does, so what this company does is it produces high-tech farming equipment and high-tech farming facilities that it has the ability to produce 20 to 30 times more crops using 10% of the water of its competitors, i.e. old school farming techniques. Now this is incredible and we'll go over how they do this, but basically this is going to drastically lower the prices that it will cost to produce a lot of these basic crops like tomatoes and cabbage and lettuce and lots of other fruits and vegetables that you know and love. But AppHarvest is on the brink of something incredible, and we'll get to that in a second. There's one twist to this company that gives it massive potential, and it's not so much selling crops, and we'll get to that later. But as of right now, this company is trying to build out as many of these facilities as it can. Now, if you see the roof here, traditionally what this company does is that it has a lot of these, you see these little ridges where I'm hovering my mouse, over the top of these ridges where the ceiling is, where the roof is per se, you can see that it has these little bitty bumps, and basically that captures collected rainwater, and it strategically puts these buildings in areas where it is most plentiful in rainwater. And then you can see it's also stored and collected over here through excessive usage of the rainwater. And then there's also no power whatsoever that they hardly use throughout the building, because they almost exclusively use sunlight for and solar energy to power their buildings. But anyways, it's very green efficient, very easy for them to produce these crops at a very cheap level. And not only that, they're building these farms left and right. Right now they only have one or two, actually they just started the second one. They only have two up and running and producing revenue from selling those crops, and they're trying to expand that very, very quickly. If you go and take a look at this article, this is as of June. So remember, this is even as of a couple months ago. So right now it is October 12th, the time I'm filming this. So this is almost 3 or 4 months later. But right now it says AppHarvest announces a groundbreaking of 4th and 5th high-tech indoor farms. Right now, as the time I speak, they only have 2 in operation, but it's going to be very quickly, within the next 1-2 years, that they're going to have 3, 4, 5, 6, 7, 8 of these farms. And they even talk about their goals. If we scroll down here, AppHarvest's goal is to operate 12 high-tech indoor farms by the end of 2025. And so that's over the next 4 years, essentially. Over the next 4 years, they're going to be operating 12 of these high-tech indoor farms. So far so good, right? You see it's a basic business. They're looking at building these facilities that are much more efficient than the traditional facilities to produce a lot of these crops like tomatoes, heads of lettuce or cucumbers or whatever it is, right? Now, that's not the important part here. Because if we look at their management team, you see that they have a founder and CEO, and you can read about his background here. And then they also have people on their management team, like the president, David Lee, is also from Impossible Foods Company. And then we have others like their CFO with a background in foods as well. And if we go to their chief technology officer, Josh, right here, it talks about his background with Root AI. And this is where I think you get the twist that gives this company massive opportunity. Let's go ahead and jump over to Root AI. If you don't know what Root AI is, this is the robotics division of their farming business. Root AI has been acquired by leading ag tech company and certified B corporation AppHarvest, which is building some of the world's largest indoor farms to grow non-GMO, chemical pesticide-free fruits and vegetables. AppHarvest is making good on its mission to build a more resilient food system. We're excited to join the company to continue to create the intelligent robots that will help growers build the farms of the future. So I got it on mute here, but I just wanted to show a couple seconds and I'll talk over it. You can see that this is what their robots are looking to do. This shows an example with a small tomato farm. Do you see how you have a traditional worker in front of the video? You see the guy picking plants and they're paying him however much an hour to do so. But this robotics right here, the Root AI, can pick those plants straight off of the roots, and it is able to recognize which are ready to pick and which are not. It has a camera system with tens of thousands of images of tomato plants and is able to tell which one of these are ready to pick and which need more time to continue to grow and continue to get to that level of ripeness that they're looking for. And it takes very little maintenance from the employees, and it is very efficient. And the reason why I think this is so great, why it matters, as you could say, this is not so much the opportunity for them to pick vegetables faster. While that might be the case, what it really is it allows two things, and the second one's the big one. The first one is that means less employees. They're not gonna have to pay nearly as many employees, what is it, $10 or $12 an hour to go in there and pick lots of fruits and vegetables and pay those employees benefits and give them paid time off and all that stuff. But they can build robots for a one-time upfront cost, and they can also depreciate that equipment, and it will likely do it for far, far cheaper in the long run than any employee would ever be able to do it. And I think that they're doing this at a very efficient level. And the second thing is, and that's really the big opportunity, is that they could potentially license these out to other ag tech farming companies. And so if you're a startup, if you're wanting to start some of these farming facilities, if you want robotics to pick the fruits and vegetables for your company, you're going to have to start your own robotics company from scratch. Not very easy to do. It is going to take millions and millions and maybe even billions of dollars to do so. And what you could just do is just pay a small licensing fee out to Root AI, buy them directly from AppHarvest and their company, and Root AI will begin to receive revenue from licensing out their robotics products to other competitors, as I think these ag tech facilities will become more and more common. We all know that the population is growing. We all know that food is becoming harder and harder to come by. It is becoming more expensive. And the best part is that this is beneficial towards our country, towards us as a human race. It is going to make plants and vegetables much more cheaper to eat. And I think especially as we have the new plant-based food eating diets becoming more and more popular, I think that this is definitely going to be in more and more high demand over the next 1, 2, 3 decades. And so if I'm right and more of these ag tech companies continue to build these facilities and nonstop continue to grow these type of businesses that we see AppHarvest is doing, these type of facilities, then if that's the case, then the demand for these robotics is going to skyrocket. And right now, they're one of the only companies I can see that really has investor backing behind them to produce a product like this. Now that's all fine and dandy, but looking at this chart, you'd probably think that there's a lot of negatives behind it. And we just went over the positive and all the great scenarios behind this company, but this is without a doubt an extremely risky stock. And that is why you've seen the stock go from $43 a share all the way down to about $5. It is now at a market cap as of today at $546 million, and so this is a micro cap stock, at least in my opinion. It is not one that I normally would be investing in. It is very rare to see me invest in a company under $500 million. I actually only invest in one that is under $1 billion, and it's actually almost the exact same size, and that's CleanSpark. And so far, believe it or not, it's actually been my best performer, strangely enough. But looking at AppHarvest stock, you can see that with this downturn, it comes with its set of risks, and we're gonna go ahead and look at that now. Looking at their balance sheet, you might look and say, okay, it has $273 million on the balance sheet, and their long-term debt is not very high, $72 million. So net cash is about $200 million roughly, which is very high, $200 million for a company that's only $500 million worth. Well, that doesn't tell you the full story. The problem is that if we go to this analysis tab, you can see that for the year 2021, their revenue is going to be $8 million. Just $8 million for a company that's $500 million with a B, and they're going to lose $1.23 per share over this year to finish out 2021. which means that they are going to be burning cash like crazy. They're going to be losing a lot of money on the bottom line as they build out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 facilities over the next 5 years. This is the thing about this company, is that since they're in the such baby early stages, is that right now they have little to no revenue. Because like I said, this year they have 8 million in revenue, but next year they're only going to have 36 million for, once again, a company that's a $500 million, over $500 million. And so this company, as of today, while it's still in the early stages, as of today, has little to no revenue. And even next year is expected to lose a significant amount of money on the bottom line. Now, if you look at the amount of shares that they have outstanding, as of right now, it's about 100 million. And if we look at their earnings per share, it's 0.94. And so we know, looking at that basically this company is looking at losing about $95 million roughly on the bottom line. That's what is expected next year. And this could very well be more drastic losses than that. It could be negative $1, negative $1.10, $1.20, $1.30, because right now, like I said, they're not focused on profits. They're not focused on revenue. They're just focused on building out these facilities and investing back into that Root AI business like we talked about. Now, looking at the pros and cons of this business, the pros are that they're producing an incredibly high yield of crops for a significantly less amount of water than what traditional farming techniques use. This is great for the environment. This is great for us as a human race. And I think investing in this company for a moral standpoint is fantastic because, like I said, they're a B corporation, which means they're for the public benefit. They are growing very fast, but that's because they're very small, but they are growing very fast, and they're going to be building about a dozen facilities over just now in the next couple of years. They have a fantastic robotics potential because as this company continues to expand, competitors are going to come out there like it, in my opinion. And if that's the case, they're going to likely need robotics to compete, and Root AI is a perfect opportunity to license out and sell those products to their competitors. Their management team seems pretty solid from what I can tell. I've seen some of the interviews and some of their conference calls. It's founder-led. They have a history of being in food businesses from multiple leadership positions. And that's pretty much it for the good side. But the bad news is that, like I said, right now this company has little to no revenue, massive losses on the bottom line. They're likely going to be diluting shareholders and raising debt left and right to get this up and running. Now, like I said, they're in the baby stages, and right now there's almost nothing to show for it. But will this turn around in the next couple of years as this company continues to expand and grow and scale their business? Well, time will tell. And so as for me, I own nothing in this stock. I have no ownership stake, and I don't plan to for the rest of 2021. Now, as we get throughout the next year, if this company continues to expand, continue to build out, and they start to show proof of stake in their business model, I think this is the type of opportunity where I think one of the two will happen when we look at the stock over the next 5-10 years. This will either be at $0, they will be bankrupt, or it will likely be much higher than $5. When we have this conversation 10 years from now, I think this is either a $0 stock or who knows, maybe even a $100 stock. Who knows, depending on how successful they are with their robotics business. But it's definitely a wild card, definitely a high risk business. Never one that I'm going to have as my number one position at all. But if they continue to downtrend to get $4, $3, $2 a share, and they continue to expand their business and they are successful in producing those products, then I may consider a small position just as a complete spec play that could have some huge potential. But thank you guys so much for watching. It's not financial advice. Do your own due diligence before you make any investment decision, because this is an extremely high risk stock and I'm not recommending buying it at these levels, but I am going to be watching it if it drops significantly further. But thank you guys so much for watching. Check out all that stuff down below for the links in the description. And thank you guys so much for watching, and I'll catch you guys next time.